So, obviously, we've got a tricky kind of week, but obviously, we did navigate it very well. Only two trades for us yesterday. So let me go through a little bit of obviously what we've got going on. So today is a heavy day. Let me just zoom in because I had to zoom out on this. So zoom in. No, not that far. That is a bit too far. There we go. Right. So we've got obviously a very, very active day today. We had some claim and clown, a claimant count for the pound and unemployment rate. Pretty, steady. Nothing can't kind of major here. Let me just refresh my page if it does it. Come on, there we go. Right. Euro, we've got some PMI data, and for the pound too. Now, the afternoon's going to be a little bit interesting. So we've got some non-private, non-farm payroll data. We've got the unemployment rate. It did tick up, I think, last month from 4.3 to 4.4. So it'd be interesting to see what happens here. Employment hasn't been great from the US dollar. It's going to be quite an interesting one here to see obviously what's going to happen. Obviously, if non-farm payroll misses, unemployment rate probably stays pretty similar as expected. It's obviously not going to hit the dollar that great. So what we're going to do is we'll probably post this. I'll probably do the afternoon trades after this news comes out. All right, we want the crazy activeness to come out and obviously happen, and then obviously we'll look to hop on a trade afterwards. So this is obviously one thing I like to do, and obviously those of you who have been in the channel for a while will know that I like to trade around higher impact, news, so that we don't ever get caught with these crazy, drops. Um, so yeah, we'll obviously be probably getting the afternoon trades out about quarter to two, so that we can let all this news happen, let these waves be created, and then obviously we can ride them. But apart from that, I'm not really too bothered. But it is a heavy afternoon, so what I will do is trade this morning, come like 12:30, we'll close out everything, and then we'll obviously wait for news to come out, and then obviously wait for whatever new waves and impacts are going to be created, and then we will hop on them afterwards. So just to be aware of that. Right, let's go through what we are kind of looking at today. So dollar, this needs to be everyone's first port of call every single day. What is it doing? Ticking to the downside. All right, what does that mean? It just means that there is no dollar, strength. I do think we're going to stay within this area. I could be wrong, but I think we're going to stay pretty much within this area. If we get some really, really good employment data, then we could obviously break out of this and move to the upside, but we'll wait and see. I think we might be surprised, and obviously we might. Yeah, I think if I had to hazard a guess, we'd be angling around 98, as opposed to 98 500, but I could be wrong. So I could be wrong, but we do need a little bit of an injection. You're probably noticing how much slower markets are, how much harder it is to trade. So we're obviously looking into that, at the moment. Now, let's have a look at everything here. So, number one, this morning was euro again. I want to be entering from here. I don't want to be entering from anything else. And obviously, hopefully, you guys are starting to see, patience and obviously how much it pays to, be, you know, patient, not obviously rush into anything. So obviously that is how I like to trade. That means, probably 90 odd percent of the time, but we're going to get the direction right. If we don't get it right, it's going to be there or thereabouts. So you're not even going to have that much of a loss either. That is how I like to trade. So next one was GBP USD. Was just hoping for a little pop down into this area. As you can see, majority of liquidities here. So that is obviously where I want to enter. Yes, you could have probably entered where this wick was at the bottom of these, but obviously I like to trade it a little bit safer, because I don't want to get caught, and we haven't got caught. So that is obviously why my entry is where the majority of liquidity is. I want this to pop back down and then obviously recover from here. So that was number two. Number three was Aussie. Little bit, on the kind of fence on this one here. You can see here, this is obviously where previously liquidity came into, rejected, pushed up. So that's what I wanted to see. We obviously had this late last night. I want it to come back and retest this area. So I do think there's a higher chance that this might trigger, but and obviously EMA's everything's still trading against the US dollar. Then we've got gold here. So gold's always a tricky one. We did well. Yes, yeah, yesterday we sold it in the morning. We bought it in the afternoon. I just think we need what I'm expecting. I do expect this to trend higher, but I'm expecting something like this. All right. So we come to the downside before we go to the upside. I'm expecting us to buy this afternoon, but obviously, overall with gold. Excuse me. Excuse me. I didn't have very much sleep last night. So yeah, gold's one of those ones this week where I want to trade the overall trend. So but obviously I want to trade it from session to session. So 4305 is where I'm kind of targeting to sell it. But I do think this afternoon, a bit like yesterday, has a high potential that we might be looking to buy it. But obviously, gold, it's very, very, very important you take your profits when you are happy. Because these are obviously just overall outlooks that I put in, but obviously you've always got to take it when you're happy. I personally have session targets. That's what helps keep me kind of rigid. Um, so yeah, you obviously always want to be aware of that. And last but not least is the USD JPY. So yen is again pretty strong this morning, but I'm not obviously willing to risk it. It's not clean moves anywhere. We've obviously got a lot of rejection here. Um, so it's not clean. So I just want to, wait for us to come back up and test this, and obviously that will continue our downtrend here, as you can see here. That's what I'd be interested in, is something like this. So yeah. That's obviously my outlooks here. That's what I'm looking at. If we have a quick look at yields, yields are a bit kind of not really doing much as expected. If these are, I personally think the US dollar is starting to stabilize where it is. I don't think it is particularly going to you know yeah, drop much further than where it is, at the moment. So the only thing that would push it a lot further down would be if yields dropped, but obviously yields are starting to, stabilize here. So yields are government bonds. And obviously that's where larger investment will buy government bonds. This is their return here. So the more investment in government bonds, the obviously more, fluid the US the the US dollar is. So if we don't look at kind of, strength here, let's just have a little look at strength of pairs, what we've got today. So we got strongest is obviously yen, then we got NZD, pound, euro. Obviously at the bottom we've got CAD, um, Swiss, and USD. So we're obviously going with the overall trend that US dollar is, one of the weakest pairs out there, or weakest currencies, if not the weakest. Right, let's have a look at these questions here. Morning, Ryan. Morning. How do you choose your gold? How do you choose your gold entry yesterday? Which one? Raoul, morning. Skid, same question. I was going to ask gold. I've looked back and can't work out why you picked entries which were absolutely spot on. Morning, done nothing to do with zooms. Do you have any? I'll go through the gold entries in a minute. Nothing to do with today's Zoom. Do you have any recommendations for easy read, understand retail trader book? Not really books, because you don't really want to understand retail. The more you can understand how funds work and how the market works. So I would, do you know what? There's a great trading book called the Turtle Trader, or Turtle Traders, and it's a true story. I cannot remember because my brain is absolute mush this morning. But yeah, it's about a guy who was a very 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 good trader, and he wanted to prove that he could teach like 12 people from off the street, or from different walks of life. He called them his turtle traders. And he basically taught them his strategy, and most of them are now or have run hedge funds and stuff like that. And so that's a good book, which I'd recommend. What's the other one? There's a book from Ray Dalio, Principles of Investing. That's a good one. It's quite heavy, but obviously that is a good one too. The main books that I would read is about mindset. Um, I had a call with someone from Saudi. He wanted to pitch me something that he wanted to know if I, one, I had the skill set, and two, I wanted to work on. And he referred to something which has stuck with me actually since the call. This was last week. And he said, what, Saudis love slow money. All right. Now, it was really, really interesting because, I think we're in a culture where it's get rich quick. If I was to tell you that, you're going to make 50 quid a day, you wouldn't be that impressed. But by the end of the year, you would be. And I think I'm a bit like that too. If someone sometimes brings something to my table, I always look at the monthly, as opposed to not rather than looking at the yearly, the 5 yearly. So trading is a bit like that. I'm going to prove it with this 10K account. I'm just going to, the one that's on the copier, I'm just going to keep scaling it, and then we can obviously we can, yeah, see obviously where we end up at the end of next year. Or what I might do is split it into two. So I got one, once it gets up to probably about 20K, I'm going to split it into two. I'll do one slightly higher risk, and then obviously one just ticking over. So yeah, but let's wait and see. That's enough of me waffling. Um, I saw the afternoon. I saw the entry for the morning, but I didn't see any point to go off for the afternoon one, as didn't as and yet it hit and flew. Yeah, So yeah, right. So I've gone over my kind of outlook on gold. Very, 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 similar to, here. You've got to look obviously where overall liquidity is, and then where, majority of people are going to enter. All right. So what I think majority of the retail market is going to look for is this trade here to the upside. Yeah, right. They're going to look to buy. Why? Because they're going to be like, right, you know what? There's liquidity here. There's a massive rejection here. It's rejected once, twice. It's coming in. So what you're gonna, see if our trade triggers is we're gonna see this, reject and look perfect. What does that make people do? Load up heavy, all right? They're gonna load up, super heavy, all right? But there's not enough buyers in the market here, like we've proved, to take this up any higher. So for gold to trend higher, it's got to bring in more buyers. Now, the big boys, it's not worth them buying where price is right now. They want to buy from this area here. Yeah. Right. Because, there's one that there's, lot of orders here. Anyone who bought here who's holding is then going to be back to break even. Chances are, stops are going to be at break even. So they're going to close down. All right, that obviously wipes a bit of money off the table. Remember how trading works, and obviously those of you who trade stocks and sometimes crypto too on an old school exchange, you will obviously be trying to buy certain amount, and obviously all of these orders come in here, yeah, all right, so if you're trying to buy 20, all right, say for example, I'm just using this as a, random number. This order here might be five, this one here might be six, this one here might be four, this one here might be three, and this one, might be two. So your 20 is made up of all of these guys who are either being liquidated or are, you are just want to close their positions. So institutionally, we don't see that, or retail side, we don't see that. Um, Whereas obviously, yeah, the big boys do. So what they want is a lot of liquidity to become available here, all right? And then obviously that they will that's the only way that gold is going to push higher, all right? Now I'm not necessarily, saying that that's going to happen, but obviously that's the only way that it's going to push higher. You got anyone who's bought from here and held, anywhere in this area here, bought from here, held. Chances are, if this comes back to break even, they're all going to come out. And what's that going to do? That's going to open up all of these orders here to then be bought up to then give that impulse rush to take it higher. So then buyers will take over. So that's like a brief outlook of looking at a chart from the other, side, potentially. So it wouldn't surprise me, it's looking like a, sell. It's a constant trick. Candles are constantly there to catch you out, So yeah, it wouldn't surprise me if everyone's starting to buy here to obviously uh, carried on. But you have to understand this area here is where the liquidity is. So it's got to be tapped, and I'm obviously happy to mark it out. But this area here has got to be tapped again before we get that impulse of orders to overtake what's happening here. So that's obviously why I would rather wait for this move to happen. We'll wait for obviously our area to tap, and then obviously we can hop on it. And obviously that's why, although I'm very anti the US dollar, I appreciate the gold chart and obviously how it, looks and how price needs to drive in here to collect the to collect the amount of orders that it needs to obviously send it to the upside. So hopefully that makes sense. But obviously, it's yeah. Does anyone have any more questions? Any more for any more? Let me while I'm on here, I have a look through my Audible actually, because I went through a year and I must have slammed through so many books. So I've got hundreds. So I got 129. I mean, I'm a big Jack Reacher fan now, but I've read everything, absolutely everything. Let me see if there's any here. I mean, one that everyone's got to read is, Rich Dad Poor Dad. If you haven't, Think and Grow Rich, brilliant. Um, The Monk Who Sold His Ferrari, brilliant. Let's see what other ones that I've the Alchemist, brilliant. Oh, that's a good one for trading. Trading in the Zone by Mark Douglas. I even read the big short for anyone who's looked into that. The Richest Man in Babylon, epic. I also read this book by two Marines actually called Extreme Ownership, and it's basically being able to when a situation goes against you, for example, trading, it's having that ownership. We're in a blaming era, all right? Everyone blames everyone. Yeah, we're always blaming. We're always, oh, if the broker hadn't have done this, then I'd have made money, or if this hadn't have done this, I'd have made money. But actually, read this extreme ownership, because how, I mean, there's probably some, military men in here, but obviously, how the military, or my impression of how the military do it is, if anything goes wrong, it's whoever's in charge, because his team are haven't he's not training them, correctly, or he's not, he's missed a bit of the, mission. So it's about, I really, really respect that about the, military is they take ownership. And I think that trading, that's a huge kind of skill to have, whereas if something goes wrong, if um over leverage or go all in, or you deviate from your plan, you need to have that ownership, that it's no one's fault. It's not the broker's fault. It's not anyone's. It's yours. So, and you got to understand as well, it's not always a bad thing that it's, your fault potentially. So yeah. Um, yeah, that's about all my books. I've got hundreds here. So, there was one, oh, the other one that's really good is Outwitting the Devil. Really good. So, right, I'll hold that there. I've even got things like the Art of War. There we go. Do you want to know the first book that I read on trading was called How to Day Trade for a Living. It was the biggest waste of time ever. So yeah. Nice one. We'll get a couple, see how I get on. I'm reading that now. What are you reading? Um, Fail, bloody loads, yeah. Trust me, I spent a lot of time driving, and yeah, so I just listened to audiobook after audiobook. But yeah, I'm into more kind of fiction, now, no non-fiction. So because I've read every self-help book, everything. I went through a dark place. But yeah, right. So yeah, let's wait and see. Does that answer your questions about gold? Yeah, and the kind of explaining what it needs to go higher. Yeah, hopefully that answers everyone's questions. There's loads of things which I'm going to do. I'm just doing a like a section of videos for the course, which I'm going to add in probably when I finish them. It's probably going to be around Christmas. So yeah, obviously I'll be adding those onto the course, which is pinned in the channel. So yeah, I'm going to be constantly adding to it because I want to make sure that everyone's in the right headspace. But if does anyone have any more questions, anything you want me to go through before we wrap it up? Happy to answer anything. If not, we'll obviously end it here. And then we will, yeah, uh, try and make some money as well today. It was a good day, yeah, yesterday. So hopefully we can continue these greens here. Green, green, green. Just to give you a heads up, I'll probably put a few positions in on Christmas Eve in the morning, but I won't. But then I'm going to stop. Uh, Christmas Day will be closed. Boxing Day, I'll put a few positions in, but you've just got to be aware it's going to be very, very slow. But yeah, I'll put some positions in it. Anyway, we'll be back to normal 27, 28, 29, 30. And then obviously New Year's Eve will just be a London session only. So yeah, but no, then let's leave it here. Hope everyone has a good Tuesday. Let's be patient. Let's smash it. And yeah, have a good one, everyone.